Most breakouts look the same. Price breaks a high or breaks a low, and traders rush in, expecting continuation. But some breakouts explode, while others fail almost immediately. And on a normal chart, they can look nearly identical. The problem is that price alone doesn't show conviction. It doesn't show who actually controlled the breakout. That's where breakout volume delta changes everything. It reveals the buying and selling participation inside the breakout candle itself, so weak breakouts stand out from strong ones instantly. In this video, you'll learn exactly how it works, how to configure it properly, and how to use it together with the price action toolkit to build high-quality long and short breakout setups. Let's dive in. At its core, the breakout volume delta measures breakout strength using lower time frame volume delta. Instead of just marking that a level was broken, it analyzes the actual participation inside the breakout candle. It does this by breaking the current candle into lower time frame subcandles, summing the volume of bullish subcandles as buying pressure, and summing the volume of bearish subcandles as selling pressure. Those totals are then converted into dominance percentages. The result is visualized directly on the breakout candle using a split body overlay. One portion of the candle body represents bullish participation. The other portion represents bearish participation. So instead of guessing whether the breakout had conviction, you see it instantly. Now, before going into the settings, let's talk about the structure behind it. The indicator first identifies swing highs and swing lows. These swings define the levels that can potentially break. You control how sensitive this detection is using the swing left and swing right settings. These determine how many candles on each side are required to confirm a pivot. Higher values reduce noise and require stronger confirmation, but they also introduce more delay. Lower values detect swings faster, but may capture more minor levels. It's a balance between responsiveness and reliability. Next, there is swing time frame. By default, it uses the chart time frame, but swings can also be detected from a higher time frame and projected onto the current chart. This is powerful because it allows trading on a lower time frame while still respecting higher time frame structure. The indicator combines smaller candles into higher time frame logic, tracks the highest highs and lowest lows during that period, and saves the exact time those levels occurred so they can be placed accurately on the chart. Once a swing level is identified, the indicator waits for a breakout, and this is where the real difference begins. Instead of just marking a breakout based on price alone, breakout volume delta evaluates what happened inside that breakout candle. The volume delta LTF setting controls which lower time frame is used to estimate buy versus sell participation. For example, if the chart is on a 15-minute time frame, 1-minute sub-candles can be used to analyze the breakout. Bullish volume sums volume from sub-candles where close is above open, and bearish volume sums volume from sub-candles where close is below open. Those values are converted into bullish and bearish dominance percentages. Now, the chart doesn't just show a breakout, it shows who actually controlled it. You also control how a level is considered broken using the breakout buy setting. In wick mode, a breakout is confirmed when the price wicks beyond the level. In close mode, the candle must close beyond the level. Close mode is stricter and generally more conservative, and wick mode is more aggressive and captures early moves. Then, there is show nearest. This limits how many recent swing levels remain visible on the chart. Older levels are removed once the stored level count exceeds the chosen number. This keeps the chart clean and readable, especially during volatile sessions. Now, let's talk about one of the most important features, the breakout volume filter. This is optional, but extremely powerful. When enabled, a breakout is only validated if the breakout candle shows enough dominance from the breakout side. For bullish breakouts, bullish dominance must exceed the threshold, and for bearish breakouts, bearish dominance must exceed the threshold. If the filter fails, the level is removed instead of being marked as broken. That means weak mixed breakouts simply don't qualify. This single feature eliminates a huge amount of low-quality signals. From a styling perspective, the indicator allows customization of how unmitigated levels appear, how broken levels look once they lock to the breakout candle, and how far levels extend forward using extend levels. If extend right is enabled, levels extend indefinitely to the right until interacted with. If disabled, they stop at a fixed future point. Volume delta labels can also be enabled, which print bullish and bearish volumes, along with dominance percentages directly on breakout bars. Bullish labels appear above bullish breakouts, and bearish labels appear below bearish breakouts. Now that the mechanics are clear, let's look at how this translates into a real trading context. Imagine price breaks above a swing high. On a normal chart, that's a breakout, but with breakout volume delta, two completely different outcomes may appear. In one case, the breakout candle shows 78% bullish dominance. The split body overlay clearly shows that buyers controlled the majority of the move. That breakout has real participation behind it. In another case, price breaks the same type of level, but the candle shows 55% bullish and 45% bearish. That's mixed participation. That means sellers were heavily active inside the breakout. Structurally, both candles broke a level, but internally they are completely different. This is the difference between price-based breakout logic and participation-based breakout logic. A strong breakout often continues. A mixed breakout is more likely to stall, retest, or even fail. Of course, that doesn't mean dominance guarantees continuation, but it provides critical context that price alone cannot show. So, how should this be used? First, identify structure using swing highs and lows. Second, wait for a breakout. Third, evaluate dominance. For stricter filtering, enable the breakout volume filter and set a threshold that matches the trading style. Conservative traders may require 65 to 70% dominance. More aggressive traders may accept lower thresholds. This approach can also be combined with trend analysis, higher time frame bias, or liquidity zones. The key point is that this indicator doesn't replace structure, it strengthens it. Now, if this approach needs to be taken even further, this is where integration comes in. Breakout volume delta works exceptionally well alongside the price action toolkit. The toolkit provides multi-time frame structure, order blocks with volumetric confirmation, fair value gaps, breaker blocks, and market structure detection. While breakout volume delta shows how strong a breakout candle was, the toolkit helps explain where that breakout is occurring within broader structure. When both tools are used together, breakouts can be analyzed not only by participation, but also by structural context. And this combination allows high-quality trading setups to stand out much more clearly. Let's look at a real bullish example. In this case, the market initially shows bearish pressure, with price forming lower highs and lower lows. But eventually, the price action toolkit detects a change of character, signaling that selling momentum is weakening and that the market structure may be shifting. After this shift, price begins forming a base as buyers slowly step in. At this point, the key level to watch becomes the previous swing high. When price finally breaks above that level, the breakout volume delta indicator highlights the breakout candle. Instead of simply seeing a candle breaking resistance, the split body overlay reveals the actual battle between buyers and sellers inside that breakout. In this example, buyers control roughly 77% of the volume inside the breakout candle, while sellers account for only a small portion. That strong bullish dominance tells us the breakout is supported by real buying pressure. At the same time, the price action toolkit identifies a bearish order block above the breakout level. Usually this zone could act as resistance, where sellers step back into the market. But because the breakout shows strong bullish participation, buyers are able to push directly through the order block. Once that resistance breaks, the structure shifts again, and at that point, the long setup becomes clear. The stop loss can be placed below the breaker block or the recent swing low, while the take profit can target the next liquidity level above. In this example, structure and participation align, creating a strong continuation move. Now let's look at the opposite scenario. In this picture, the market initially begins to lose bullish momentum and eventually forms a break of structure, signaling that the previous upward trend may be shifting. After this structural shift, price moves toward a key support zone, identified by the price action toolkit as an order block. This area becomes the critical level to watch. As price approaches the zone, the market briefly consolidates before finally breaking below the order block support. At that exact moment, the breakout volume delta indicator reveals the internal participation inside the breakout candle. The split body overlay shows strong bearish dominance. In this case, sellers control approximately 83.9% of the total volume inside the breakout candle, while buyers account for only a small portion. This confirms that the breakdown is not simply a minor move below support. It is a breakout driven by aggressive selling pressure. With both structure and participation aligning, the short setup becomes clear. The entry occurs as price breaks below the order block support, while the breakout volume delta confirms the strong bearish dominance. The stop loss can then be placed above the recent swing high or above the order block zone to protect the trade in case the breakout fails. Meanwhile, the take profit can be positioned at the next liquidity level below or the next higher time frame support zone. As the market continues to move lower, the trade develops into a clean continuation move. Once again, this example highlights the key advantage of combining these tools. Breakout volume delta shows who controlled the breakout, while the price action toolkit explains where that breakout matters within the broader market structure. Used together, these tools provide both structure and participation, context and confirmation. Instant access to the full suite of premium tools is available at fluxcharts.com. There's also a link in the description. So, here's the bottom line. Most breakout indicators tell you when a level was broken, but breakout volume delta shows how it was broken. It visualizes breakout strength directly inside the candle, maps lower time frame participation into higher time frame structure, and filters weak moves when stricter confirmation is required. Not all breakouts are equal, and now, the ones that truly matter become visible. If this was helpful, hit the like button, subscribe for more advanced indicator breakdowns, and drop a comment explaining how volume is used in your breakout strategies. Thanks for watching, and see you in the next video.